Hey traders, David Frost, MyStrategicForecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, January 21, 2025. We are looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? We have what's called in technical terms the Trump pump. For every ending, there's a new beginning. We have a new beginning as of yesterday with a new administration, and the market took the pump side of things. We are, in fact, in an on-time type of situation, and we will note they are above all the moving averages. The trend is your friend. Even a pullback, should it stay above all the moving averages, is that just a pullback? Nothing more, nothing less. And from a big picture perspective, the market was just pulling back to run a test of the 20-period moving average, had a little scare me out of the market for the latecomers. We call them the Johnny-come-latelys. Right back up, not to the highs just yet, but they're going to approach the highs pretty soon. Let's take a look at what we actually have on the board. We have a big time breakdown candle high. The actual high is 606.41. So closing above this high today, this pivot high, let's clean up the chart. This pivot high, which they did close above today, is the last pivot or the last price in the line of defense. That high is 602.48. They closed the day here, closing print 603.05. That's the last stand before they get to run a test of the big time breakdown candle high. Now keep in mind, they don't have to run that test right now. They got in the neighborhood, but they got in the neighborhood twice. So here they got in the neighborhood. They got summarily rejected. Back up a second time. Don't bet on the rejection the second time. Notwithstanding the on-time type of situation, again, they can pull back into the moving averages, but all in all, we subscribe, meaning we, inside the number members, live room members, anybody that's listened to me teach for years and years and years, we subscribe to the first time, best time situational trading mechanism. One more time with the weekly chart, and we'll use the weekly for this one, getting above the high of the weekly breakdown candle high and closing the week, meaning a Friday 4 p.m. close above that place will likely bring a whole new leg, new highs into the picture. Just keep this in mind, write it down on a sticky note. The trend is your friend until she throws your shit out the window. She is above moving averages, all the moving averages that I use on all time frames, period, full stop. That is a trend. It was a bull day across the board. The SPX was up about 0.9%. Dow was up 1.25%, meaning 1.25%. IWM or small caps was up almost 2%. The QQQ was up $3 or 0.6%. Part of that lack of participation has to do with Apple down over $7 today. And we'll use this as an example, file this away for later. When you hear that Apple dragged down the market, when Apple's down and the market is down, a lot of times the media will tell you that Apple dragged down the market. Well, how come Apple didn't drag down the market today? Apple was down, but the market was up. They don't tell you that part when it doesn't work in their favor. They need a story. They don't realize, they meaning the media, the talking heads, the pundits, they don't realize that they need a story to tell because they have no other information. Food for thought, file it away for later, take the correlations and throw them out the window. How'd we do inside the numbers today? We did pretty good. We're going to call it a double barrel trading situation. The early thoughts have some numbers. Let's put them on the board. We'll start with the pivot, 599 even. There's your long trade today, 599 even. This is a 5-minute chart, and right of the vertical is today's activity. You could see low of day, not that much below 599. It was the pivot and support. Let's check out what we have at 9 a.m., 30 minutes before the markets open for business. What's the scoop today? As long as they're above the pivot, 599, which they were, the door is open for a leg higher toward 600.85 and 601.25. It's a zone. 600.85 was the bottom end of the resistance zone. That was the other side of the zone, 601.25, and you can see they got summarily rejected from an intraday perspective right down to what? Right down to the pivot. All this stuff was provided to inside the number members before the opening bell. Some traders in the live room and inside the numbers were short right at the opening bell. Where were they covering? We had 599 as a target and an area to bounce the tape. Let's see that written here. Remember, pause the video, read the notes, and go back to the chart to double check the work. And there's your resistance at 685, staying below, and the door is open for a further fall toward the pivot. They don't have to get there, but can. 9:44 a.m., 599 is the pivot. It's a target for the shorts. Not first target, but a target. We take multiple profit targets along the way and likely a bounce back in the other direction area. What happened? They bounced back in the other direction. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here for your viewing pleasure. Inside the number members and live room members had a pretty darn good start to the week. How about the Lazy Swing Trader Automagical Algo System? How's that doing? Actually, it's been a bonanza. The thing was buying all the way down as the market was correcting into the 20-period moving average on the S&P. And guess what? What happened when the market turned? We have a bonanza in terms of profit targets. Every day last week, and here we had two more today. Home Depot was one. The buy alert was at 387.20 average cost. 417.80 was a second profit target today, up 8% on the trade. Think about how much the option is worth for you option traders. Hundreds of percent in gain on the options. About TJX companies, another swing trade. Profit target hit today. This is the first profit target. This is what turns it into a risk-free, emotionless trade. Here's an example. This is the back end of the Lazy Swing Trader Automagical Algo System. These are the list of the recent closed swing trades. You can see here on the right the percent gain and loss. Of course, we're going to lose a few here and there. But guess what? Look at what's been going on over the last few weeks as the market was going back up. Don't forget, the buys were when the market was correcting. The market turned around when nobody thinks that it will. The system takes the emotion out of it. You get an alert, you get a stop loss number, you get profit targets, and life goes on. It's a done for you situation. What's going on over in Camp IWM? Heading for the 50-period moving average on-time type of situation. Big time breakdown candle high. Are they just going to blow through there, or are they going to find overhead resistance at that place? Odds favor in an on-time type of situation that they'll find overhead resistance at that place. And by the way, there's a second reason why, not the on-time type of situation, there's a second reason why we're expecting a turn at minimum of at least for a day or so beginning tomorrow. Why is that? It's a secret. When you take a look at the weekly chart of Camp IWM, you'll notice the big picture is they came down to run a test of the 50-week moving average, summarily bounced right off of it back above the 20, and hence all the moving averages. When above all the moving averages, the trend is, in fact, your friend. Monthly chart never broke trend, did not have a reversal candle. It's a reversal-ish candle, but it wasn't an outside candle, meaning never closed below the low of the previous month's candle. Interesting information. Might want to write this down. 231.05 is a magic/witchcraft type of number. What about the folks down at the transportation department? Guess what? The lazy swing trader automagical algo system was long the IYT from the same place where the transports found support at this blue line down here. Funny how that works. It's called putting your money where your mouth is. They've been eating some time off the clock underneath the 50-day moving average. They're working their way into that moving average. They should spike above that moving average at this point in time. Might take a few more days to get through, but that's what they're doing, ING in italics. What about the Q people? We're going to keep our eye on the big time breakdown candle high. The high of this candle happens to be 525.99. You could see today's high, 525.97. There are no accidents, no coincidences across the market. Today, they just didn't get there just yet or through there just yet. Doesn't mean they will or won't tomorrow, but we are in an on-time type of situation. Time is more important than price. The XLF, we were talking about $50. Remember $50? They're above $50. They had their sell-off. We've got the bounce back. You look at the weekly chart. They sold off into the 20-week moving average and had one hell of a rally already off that in just a week's time. And this was also an on-time type of situation. Time is more important than price. Write that down. Put it on a sticky note. Keep it within arm's length. Smash mouth, we have the triangle situation. The triangle situation is really over. They got to the apex, and you see what happened last week. We had a false breakout, a false breakdown. They reversed last week, and now we're above the triangle. The triangle no longer matters. Closed below last week's low. That becomes what we call in technical parlance an Irene type of situation. What does that mean? Good night, Irene. For now, she's above all the moving averages. She's bullish until proven otherwise. The semis is a pretty good proxy for the tech space as a whole. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.